Okay, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday night, the 9th of December. Doing a quick recap on last week. Pretty interesting. They said the Standard & Poor's edged up 0.2%, but I got that it was a flat week. I might need to check that one. The benchmark ended up at 31.45 up from last week's closing level of 31.40. Well, I guess that would be a 0.2%. Pretty interesting. Trade concerns are intensifying as the December 15 deadline for new tariffs and a China deal come up. If I was to ask this group really quickly, China deal or no China deal? Will it happen by the 15th? China deal or no China deal? No way. All right. So we have a no way. We got another couple no's trickled in. Not a chance. So then here's the issue. And it's interesting you guys have said this because this is where I'm wondering about where we're going to be at. Oh, how'd I say it? Let me put it this way. Whatever, who cares? I guess only the market does. So the question is, who here has added protection yet to their portfolio? Who here has added protection yet for their portfolio? Okay, so I got a couple of no's there as well. Okay, and I just got 4 no's and 2 not yet. And when Keeve and I were talking today, we were in that not yet category. How'd I say it? I went so far as to question Keeve and say, I'm not sure I'm going to. But this is where past history may be important for us to remember. The last time something didn't come through, we went from here down to there. And then we went from here down to there. Those were the last 2 China debacles. So when I show you 2, let me take that back. When I show those last 2 China issues, do you think we should add long puts to portfolios? In yellow are the last 2 China issues. As I take a look from 29.54 to 27.28, from 30.21 down to 28.55. When I think of how the retail trader or, I'll be honest with you, the registered investment advisor, since they're big into stop losses and churning positions, I can't help but think that I think I've reached my point of saying we probably should be protecting. A comment with 2 questions were just asked here. 3 questions were just asked here. Do you think the job report, good, and unemployment rate of 3.5 will make a difference? I don't, because we had that last week. So that was last week's news. I think this week people are looking for another reason to sell out. Kevin, do you think we're in a headline-driven market right now? Once again, I think we do. I think we started that back the end of November. I thought we would have went higher with our earnings, but we were held back by the China issues then. So if we're held back in November from some pretty darn good earnings, thank goodness a couple stocks did take off, right? I think we'll be held back again here in December. And the Fed will probably hold rates as they are. There's a 0% on Wednesday that we're going to see any rate hike from the Fed. So there's a 0% FOMC rate decision happening on Wednesday. 0% chance of a rate hike, which they pretty much told us last week. Last week they basically said, hey, we're done for the year. We're sitting and holding and waiting for things to go on. Again, I'll be honest with you. I sat there with Keeve and I thought, man, the last time someone asked me this, it was on Friday and Thursday, and we had a good Thursday and Friday. And I was like, thank goodness we didn't start to protect. But I'm being swayed. And I'm being swayed by a chart that says, some things might change. In which case, I'd like to protect that earnings. So I think Keeve and I will have a busy morning tomorrow. Up or down. That we say, it's probably time to add that protection. And it all comes down to the 2 issues where things just aren't coming together with China. With that said, let's get back up here. Interesting that oil moved big last week and Boeing fell down big last week. I would dare say they're not going to have their airplanes ratified and going through by the 15th or mid-December. In all honesty, you'd think with Christmas coming up, if anything's not done by the end of next week, it's just not going to get done. And if it's the government, if anything's not done this week, it's just not going to get done. That's plain and simple. So, looking at the chart, it's the 2 last times we had something directly related to China. Going to go all the way down and test the 200. Realistically, that's going from 31.36 down to 29.37. 199-point drop. It's about 6%, and I think we have that set up for it to happen. Now, out of curiosity, what's the smart thing to do? What would the smart thing to do here? And that's open-ended because there are a lot of different answers there, right? What's the smart thing to do? Buy more time with long puts. Trump extends the deadline. There you go. That's the one I'd be looking for. If we're coming to a conclusion, let's extend the line, extend the deadline. The problem is, what did Trump say last week? What threat that really I got to admire, in all honesty, I got to 100% admire the guy. What threat did he say last week? Not only that he could wait, Maud, but how long was he willing to wait? He was willing to wait till after the election. That is 10 more months of huge. We're talking over 100 billion in tariffs collected. For some reason, I think they were up to like 166 trillion. That is basically everything that they sell to us. We're collecting back in tariffs right now. What would you do? I love the answer. That I would have stuck it to him a month ago. Good answer, Lance. So Maud says, but consumers are paying. Maud, if you go back to last week's Monday or Tuesday, I think it was Tuesday. If you go back to last Tuesday's trade findings and adjustments, I beg to differ. Where's the evidence that consumers are paying for these tariffs? In manufacturing, it's being eaten up by the manufacturers and the sellers. Some of the Chinese goods we're no longer using. Some of them have been exempt and are not being tariffed. PPI, CPI are fine. I don't see the consumers are paying. Okay, so eventually it'll hurt earnings. You would like to think so, right? Again, we haven't seen that in the earnings. In fact, this was the last earnings that actually went really, really well all the way across the board. It might be to a certain degree that it's being masked by the America First companies, the companies that are here in the US are getting an advantage over those that are doing some of their products overseas. TV prices don't seem to be going up. So I haven't seen it, Maud. which makes me wonder one of two things. Either there are some companies that have done a really good job really quickly of diversifying their supply chains out of China to Vietnam to South Korea and so forth. Or if we're just chewing up some excess inventory that the US has had for quite some time. Maybe we're just chewing up that excess inventory on items that are going to hold that overseas tariff. I'll be honest with you. The most important thing for China doesn't seem to be goods, but it seems to be food. Seems like China needs to import more food. And they can't do it like they thought they're going to do it by replacing the US with Brazil. I don't know how much rice and pork Brazil ships out, but I do know that the big thought was that China would replace the agricultural deficit with Brazil. And it doesn't seem like that's happened. Makes you scratch your head though, right? Makes you sit and wonder. And I'll be honest with you, I'm not sure I have an answer. As I went with Kyiv, if it wasn't for this chart and seeing there in May and then in October, I wasn't too worried about it. Quick comment, there will be countries China buys from realize their position and ask for higher prices. Most definitely. Just as a, let me just put it on a historical comment here, right? Or just the way it is comment. When you're the biggest kid on the block and you've pissed off the second biggest kid on the block, most people are still going to fall behind the biggest kid on the block. And it seems like that has been what's happened. For all intents and purposes, we've got our way with Europe. We've done a phenomenal job with Canada and Mexico. But damn our House of Representatives that can't pass a damn thing and get it on through, holding that up due to leverage against our president. We've seen NATO come to pass and start to pay more of their fair share. Part of this comes down to the spoiled kid mentality. Well, I've always been spoiled, so I still want to be spoiled. And finally, the parent says, enough is enough. Grow up. Not going to happen anymore. It's interesting to think. So the smart thing to do here, would be adding some protection. The question is, do you do it with some not leaps, I'm sorry. Do you do it with some bear puts, minimizing your downside? Do you do it with straight long puts far enough in time to get through the next earnings and start to short against? There are all kinds of questions. But kudos to Keeve again, as I told you before. We sat down, and as we came to butt heads on some things, he's like, "Don't you remember what happened in April, May?" And I'm like, "No." And when you look at the chart, it puts things into perspective, doesn't it? When you look at the chart, we've got a good 6 to 8.5% drop. The last two times we were having problems with China and getting a trade deal pushed through. So here's another question. Would you protect Disney? Would you protect Disney with its $7th billion movie coming up? I see a bunch of no's. Do you protect Visa? That didn't fall as much as the market did during these time frames and rebounded higher quicker. I think you're going to have to protect Apple and Baidu. Do you protect Ford? You don't have to, because they're shutting stuff down over there. But they fell as much, if not more, last time. Crap, Under Armour took off really good today. In fact, banks in general rallied today. Do you protect banks? Maud made a question. Why not use technical indicators? Well, that's a great question. And let me just put it this way. Technical indicators are going to show that you're bullish on just about everything. So you're protecting for an event. And in times of high volatility, earnings, you can't really wait to put your protection on until after the earnings event and until after you get the movement. So the reason why you can't wait, Maud, great question, is you have a fixed news event. And so you're actually protecting for that event. You're not protecting from continued downward movement. You're protecting for the event. In which case, if you're looking at crossovers, you've got a long way to go. To get your 3 crossovers won't happen before the 15th. And that, for the most part, is all the way across the board. Apple, kind of a big down day. Really nowhere close to technical crossovers. Disney, closer, but not at those technical crossovers yet. The one that's kind of giving me fits, right? Baidu. Wants to cross. And just kidding. In fact, technically speaking, on a Williams percent R, the sucker's ready for a rebound. Where's my other frustrating one? Giving me fits. Up as high as $10, oversold. Where's AOBC going to move to? What a bugger this guy is, you know? So, interesting. We had Keeve make a comment here. So let's read Keeve's comment because he wants to put this into perspective. So I think the question is how much protection? What was different in May and October? Nothing was really different. I think you're correct that it's great earnings and no price increases. So what Keeve's trying to say is, Kevin, you need to get protecting. And based on the past history, which does not guarantee future results, damn it, I'm going to have to agree with them. So the question is, though, Keeve, do you do some Dow Jones Industrial Average long puts on a bullish moving stock market? Do you do it on the S&P, maybe the SPY or SPX? Do you do it on the NASDAQ? Or do you go through individual stocks? Do you put it out of the money, at the money, or in the money? Out of the money puts are cheap, but that's still going to give you a percentage loss on maybe a 6% drop that would be expected. So it's some interesting, in all honesty, guys, it's been an interesting conversation Keeve and I have had, but one way or the other, we're looking at adding our protection tomorrow. We've held out long enough. We've got enough bounces. We had some good earnings after the market today, after the market close. But it's time for us to check it out. So interesting. At Hurley Investments, we've had some interesting conversation going around the table. Early S&P in December, I went up to 2%. I want to go higher. But if we don't get a China deal, we might as well go for a 4 to 6% lower, right? Chewy and Toll Brothers today. AutoZone tomorrow with GameStop. AEO and Lululemon on Wednesday. Big day on Thursday. Adobe, Broadcom, Costco, and Oracle. We've got some really good stocks here that could move us higher. It'll be interesting to see though they're none that are really bellwethers, but it would be interesting to see if we get a push higher from some of these stocks. In fact, it'd be pretty amazing, to be honest with you. Economic reports. Retail sales on Friday will be the most important. Kevin, what about the FOMC rate decision on Wednesday? It has a 0% expectation of a rate hike. We're good. It's not important. Nothing internationally that stood out to me. Still going long into the end of the year, but I could change that to adding protection. I just thought I would point some things out to you, and they're not exactly accurate. For example, the Ronald McDonald House, in all honesty, it's not 90 cents. They report 87 cents. Salvation Army is like 91 cents. But pretty interesting. If you're going to give, make sure you do the best you can to give to those charities where the money will get to some of the people that need it the most. My biggest one is the Ronald McDonald House. When my boy got his foot ran over by a truck 2-3 years ago, it was so nice just to have a place in the hospital to get away. I still donate dinners there, and it was just, what an amazing, when you're going through the trauma of having a child in a hospital, what an amazing place to run away from things. And it's not really accurate, but I'm just going to make a suggestion. March of Dimes, United Way, American Red Cross, Goodwill Industries maybe aren't the best places to be giving some of your money to. My favorites, no questions asked, Ronald McDonald Houses and the St. Jude Children's Research Hospitals. That's where I give most of my money to. They're the veterans of foreign wars, but when I do the military, I am doing the Wounded Warrior, and each Wounded Warrior is unique to their own area. I live in Utah, but I still give to the Wounded Warrior group, I guess you want to call them, out there in Denver, Colorado. That's where I know most of that money gets to those guys immediately. Plus, they've got, obviously, academies out there as well. All right, what else do I have for you? Investors fear another December meltdown if those tariffs take effect on December 15th. Just something for you guys to read. It'll be interesting to see where we end up with this. So all the stuff that we've talked about, all right here. Found it pretty interesting. Bull markets often end with a euphoric rally, blow off top. If you are into charting, this is a unique one to go through and read. Technically speaking, we have had our blow off top, and it looks like we should also be done with our quote-unquote bull market. But we've heard that one before, right? Good read right here. Interesting article. Apple is killing the charging plug on its highest-end phones by 2021. It is just a prediction. I could 100% see this happening. I could see them going to playing a little catch up, and I'm pretty sure it was with Samsung, where you can borrow charges and do more charging. I don't want to say radioactively, but wirelessly. It would be pretty interesting. I wouldn't mind seeing that with their new 5G phones coming out. Here's my information on Disney. Pretty amazing. They have killed it and then some in the movies this year. Might make for some hard comps going into next year. What Trump does before the trade deadline is a wild card. Will drive markets this week ahead. Very interesting article, and you can also read through what I saw for the calendar this week to see if anything stands out to you that maybe I've missed. With that said, are there any questions? Any questions you guys have that I can do the best I can to answer those? I won't guarantee if I'm right or wrong, but any questions you guys would like to ask me? Or I'll ask you guys a question. Who is right or wrong? Me or Kiev? And I'm not going to, oh, there we go. I love it. I was going to say, I'm not going to answer whatever Kiev types in. But Mod says, always you, Kevin. And Lance, Kevin, you're the best. Not a worry. Any questions you guys have that I can go through and answer for you? If not, we'll get this posted here tonight. We'll have it out for you, obviously, before tomorrow morning. No trade, so nothing that has to be verified or looked over by the SEC, and we're good. All right, nothing's coming in. Ida, I'll show the open positions in the small account. I will show that tomorrow through the trade findings and adjustments. But I've got open positions in Apple. I mean, I'm basically in a lot of long stock right now, looking for some protection, most likely getting into tomorrow. If you really want to see the open positions, go back to last Tuesday's trade findings and adjustments. Actually, you can get it last Thursday. Go to last Thursday and you'll see my open positions that I have sitting there. I really think the only thing we've done since last Thursday, we took off somewhere between 25 to 33% of our LEAP Facebook long calls. We took some profits off of those. Closed Target down last week. Had some LEAP long calls on Target. We're just sitting around. I know someone that just showed up. For a couple of you, if you have IRA or Roth, don't forget about mandatory withdrawals. And if you click on some of your positions, you might see a little notebook on the left-hand corner. You'll see actual cost basis for your positions, totaling everything up for the year on what the true cost basis is on your individual stocks. Guys, have a wonderful evening. Pleasure being here with you today, and I look forward to seeing you tomorrow evening. Good night, everyone.